What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is November 11th of 2020. Well, folks, I hope you are having a fantastic day wherever you are. And in today's video, we've got a lot of things to discuss, from Bitcoin continuing to build in towards a major technical pattern for a major move later on this week, Ethereum continuing to gain investor interest as the price not only moves up, but as more people begin to stake ETH for ETH 2.0. We'll dive more into the importance of that later on in the video, and then also talk a little bit about one of the major altcoins that I'm watching at the moment, as it's continuing to show major strength in the market. All right, so we've got a lot of things to discuss right after our quick sponsor. And our sponsor for today's episode is Shrimpy. Shrimpy is the social trading platform for cryptocurrency. Traders can sign up for Shrimpy and start copying the best traders in the market. Copying a trader on Shrimpy is as simple as selecting a leader and then clicking the follow leader button on a portfolio. Now you can pick a portfolio you want to follow and enter a stop follow value. Once you click start, Shrimpy will begin automatically copying the leader's trades to your portfolio. Sign up for Shrimpy today at the link down below. Alrighty, everyone, so let's go ahead and dive straight into it. Taking a look over the last 24 hours here across the board in the market, the vast majority of cryptocurrencies are in green territory, with a good amount of cryptos as well in neutral territory, between 1% to 2% to the upside or downside. I want to take a moment here as we're diving into Bitcoin here and the broader crypto space, talking about Ethereum. I thought it'd be really good, as we're taking this kind of big picture view, looking at the large caps, to just look at the overall market cap for cryptocurrencies to show where we're at right now, guys. Guys, I know a lot of my titles, for example, or my content out there, I keep saying it's time to pay attention, it's time to check into it, and kind of re-update on what's going on in the crypto space. This is a prime reason why we are coming back here to the highest level that we've been all the way back here in the sense of valuation since back here in May of 2018. Cryptocurrencies have been soaring back. We've been having it as one of the strongest markets on the planet right now, far outpacing equities, far outpacing gold and silver, far outpacing properties, you name it, right? Broadly speaking, cryptocurrencies have been the best performing asset class this year, and it seems like they're going to continue as we get back up here towards those previous all-time highs for valuation. Now, we're starting to see this shape up very well in Bitcoin here. Over the last 24 hours, we actually tested it at a higher low here at the end of November 10th, and we've continued to climb here a couple $100, and it's looking like we've got a good chance that we're really coiling here, in the next, couple of hours here to the next day or so, if anything, towards a major move coming in here towards November 12th. So this is really the time frame. It's getting really, really short here, and eventually it tends to be that, the third time's a charm, either in this case on breaking down or breaking up, or soon thereafter. We've already had 3 higher lows here, 2 lower highs. It's getting to the point here where something big is going to happen very soon. So just keep an eye on it. Basically, my thesis is, if we break below here in this case, if we break below, it's not the end of the world for Bitcoin. We still have our target of Q1 of 2021 for a retest of 20K, and really starting to move towards higher levels, right? If anything, it's probably just going to be a breakdown here where price would come down, try to hold, it breaks down, and we'd probably go down towards one of the mid ranges here where we were holding resistance at the first time, where you can see there's a lot of resistance in this range with price. So in this case, price would come down, find some support, and start to move higher, right? Very rough drawing there in that case, but just I usually like to use the line tools with the polyline tool, but that's just basically kind of a thesis on what I would think if we go down. If we go up here, I don't think it's going to be absolute pandemonium and FOMO. I really think that, or pandemonium, in this case, I think that we're going to get a breakup here towards 16K, or another even level like 16,200, and we come back down and make this line new support and really push sideways for some time, giving some room for altcoins to grow, Bitcoin holding its valuation, and then eventually setting the stage here after setting up a bull flag, which we're going to probably need here after all the upside that we've had here, right? When you have this kind of crazy rally here where it started to go vertical, you want to see what we've already kind of seen right now, which is basically slightly lower highs and slightly lower lows, formulating a bull flag, and then continuing upward going into the close of the year. That would be the optimistic bull case in that case, for me personally, from what I can see here. Just trying to be as rational as possible in the market. But I know some of you are in the ball camp that this is just going to continue going vertical. It could, because there really isn't much resistance here. The only thing that I'm worried about is, again, this 16K range here, where for both weeks here back in January, outside of the highs up here around 19,900, really pretty much 20K, as everyone was watching for the big evens, it's basically, if you look at the the close of this candle here, 16,174, and then here we have 16,275. Those range around that even level of 16,200, and I think that we're going to experience a tad bit of resistance here, have a bull flag, and continue higher. That's my general thesis. You can agree to disagree. I'm just wanted to share that with you guys in my honest, transparent way if you're looking to do any short-term trades. But I want to focus more importantly here, as Bitcoin has obviously been still on stage, it's the biggest crypto. A lot of people are ignoring Ethereum. Now, I understand that over the last few weeks, alongside most altcoins, Ethereum was getting outpaced by Bitcoin. It makes total sense why people were focused on Bitcoin. But as a trader, you always have to be 2 steps ahead. You do not want to find yourself 2 steps behind where if you were in Ethereum or altcoins, now you're FOMOing into Bitcoin in this case. The chart for altcoin dominance here is showcasing us that we want to focus on altcoins. And the first player here that's going to benefit is Ethereum. Now, Ethereum not only has the speculative, investors here in this case that are going to start getting interested in Ethereum, as we've already seen price continue to increase. Just a couple weeks ago, we were sitting at $330 for Ethereum, and now we're sitting up towards $458 at the moment with a high around $466. So this is all looking really good. Ethereum's chart here, just turn off the drawings here, guys. And, whether if you're looking at the logarithmic chart, you look at the standard chart, to me, this looks fantastic. We can even take a step back in this case, and I do want to do that here in a moment, where we can look at a bit of a longer price history chart here. But this is just on Binance here, and you can see that we're getting very close to a very critical point here for Ethereum, because this resistance point of $500 plays a lot of significance. It was resistance here, attempted support here as price rebounded, and we broke through, all right? And it's also been able to hold us down relatively close over here. And after you break 500, the reason it's so significant is, A, it's a big even number, but also this is where Ethereum within a couple of weeks, really just a couple of weeks, went from $500 per coin all the way up to almost triple of that. Almost went up to around $1,438, almost going up towards $1,500. That's incredible for such a large cryptocurrency like Ethereum. It's not a micro cap, it's the second largest crypto, and to do that is going to entice a lot of investors to get up above that price range, right? If we can get up there, make it support, bounce off, this is going to be huge, guys, huge. Now, this is coming fundamentally, again, before I dive into those fundamentals, I just want to take a step back, show you guys, maybe if you look at Bitfinex, we've been talking in the newsletter here about how this was the golden range for Ethereum back here in March, and we were pretty much hit it right on the nail in this case. And now we've started to make this range over here that, again, we wouldn't see on the previous chart support. This was resistance for multiple months here, almost a full year here for Ethereum, where we had multiple retests this level. We now made that support. So again, the prices are looking phenomenal here. But I want to go ahead and dive into something that's very important and fundamental towards the supply and demand dynamics here of Ethereum. Whether you like Ethereum or not, again, we have to put our personal biases aside. I love Ethereum as a network, but that's not why I'm simply investing in it, right? There's a lot of things I enjoy in the world, companies that I think are fantastic, and I don't invest in their stocks, right? And the thing is because at the end of the day, the thing that's going to determine me investing in crypto is, do I believe that there is enough demand and a limiting of supply here to drive price higher? At the end of the day, that's how all markets work, right? It's the same reason why you buy properties. You wouldn't buy a property that you didn't think someone's going to go out and buy, right? In that case, you have to think about, are there going to be more buyers coming in paying a higher price? In Ethereum here, there is a clear supply and demand dynamic here that is going to drive a lack of supply in the market as we see increasing demand as price increases. And that is ETH 2.0. Now, Ethereum 2.0, just to give the clean-cut answer, ETH 2.0 is a multi-stage process where Ethereum is transitioning to proof of stake. They are not only going to be giving out staking rewards, but also they are going to hopefully have a more high throughput going in later into probably 2022. This is going to take a very long period of time from our understanding. Late 2021, 2022 to just even see some of these benefits coming through. Vitalik has said that, etc. But it doesn't mean it's not starting. But one of the best benefits of ETH 2.0 for the price of Ethereum is the transition to staking. And as we launch ETH 2.0 in December, the first phases of it, this is going to begin the staking process here, where people are starting to put away and become validators of the Ethereum network by staking sets of 32 ETH. So you become you can get one validator node in this case for staking 32 ETH. And again, we've just hit an all-time high here. This is the important fact here, an all-time high in the amount of number of people holding 32 ETH. So this is a chart here from Glassnode that actually demonstrates this. Again, a lot of this growth here was probably just over years, people just holding either 32 or more ETH in a wallet, and now we've started to see this number is continuing to climb here going into 2020 as ETH 2.0 is getting prepared. Now, the thing that's important to note is that we haven't seen a crazy amount of substantial growth, and ETH has already performed the way that it has. So what's going on here? Well, as an important point that they bring up here in the article for the kind of overall focus of the ETH 2.0 amount of people who have deposited for staking for ETH 2.0. One point that they bring up that's very true is yield farming. A lot of people probably are not depositing it just yet. They're trying to benefit from the yield farming craze at the moment. And then you're going to have a lot of people as the network comes live and has that ability to have staking. You're going to have a lot of people probably claim that validation. But again, as time progresses, this is something that's going to continue to apply pressure. It's no longer just people buying ETH to speculate and then go invest in ICOs. Those days are over. It's, in this case now, a new wave here where there are going to be a lot of people locking in ETH alongside the ETH that's getting locked in MakerDAO and a lot of other DeFi applications. And this is what's really exciting to me personally. So again, we'll have to keep an eye on it. Even, for example, not only is this coming out on December 1st, but I just want to mention that, Raoul Pal, for example, is coming out and mentioning here that, he's even excited about it. He's interested to see if this is going to have a change in the supply and demand dynamics. That's a real tongue twister there. Supply and demand dynamics here of Ethereum. And I got to be honest, guys, there's no argument here. If you're going to be locking up these Ethereum and that number continues to increase, it does change the variables for price. It is going to drive price higher so long as we see what we've seen throughout history, which is that as price increases, demand increases for that asset. And therefore, in this case, with the lacking of supply, it's just going to hit it home even harder. So the last thing here I wanted to hit on here in regards to altcoins, again, I'm going to be doing my overall kind of altcoin video here in the next week or so. I'm working on it. Hopefully I'm starting later on this afternoon to start putting together some of the research and then going over the next few days or so to get that info out to you guys. So I know a lot of you are really excited. Again, if you're interested in that kind of top 10 altcoin video for 2021, smash the like button, then also as well subscribe to the channel and let me know what you guys would be interested in. But I wanted to mention here about Ampleforth. Ampleforth has been a play that I've been holding for some time. It's been one of my largest altcoin positions since we've been really making positions back during the summer. And I actually continue to hold it as a losing position. I'd actually built it, I think, around like 180, 170 million. Not exactly sure where it was. It's somewhere around that range off the top of my head. But now we're starting to get back into neutral territory, and it was one of our recommendations for the November newsletter. And so far, it's performed phenomenally well. We basically released the newsletter here on November 1st, started off around $105 million market cap, and now it's at $162 million. So more than a 50% return in less than 11 days. Not bad if you can get it. I think this has been one of our strongest calls. We were really vehement about Ampleforth in this case. And if you're interested in learning about it, again, guys, don't just buy the asset and stuff. Same with, not just buying Ethereum as we talk about ETH 2.0 or Bitcoin. With anything, you have to research it, understand about what rebasing is, understand about some of the technical features of Ampleforth before you get interested in it, right? There's a reason I like it. It's something that is definitely different than most assets in the cryptocurrency space, as it has a dynamic and elastic supply. So I would recommend learning about it, reading about it. It's a bit technical, but I think just like the Bitcoin white paper, we give it 2 or 3 reads, you'll probably see why it's a pretty interesting asset. Think of it like a central bank for crypto, which is what to me is really fascinating. But anyways, I digress. I wanted to mention as well here that if you want to take a look here on metrics, another important thing that you can take away, and this isn't just for Ample, it's for a lot of different assets out there. One important thing you can always do is do ratios, again, as we've talked about on the channel, where I did Ampleforth divided by Bitcoin's market cap. And this is actually really important to do Ampleforth's market cap divided by Bitcoin's market cap, because Ampleforth's market cap is what really tracks the value of the network. As the supply can change, the price of what you see, which is generally trying to peg itself towards $1 or slightly around $1, slightly above or lower. Because of that, you can't, chart Ampleforth to Bitcoin with its direct US dollar price, right? Well, in this case, what we want to do is check the market cap here versus divided by Bitcoin. So we can see here that ever since back here, we actually just set in our highest level since back here in October against Bitcoin. So one of the few altcoins that are outpacing it. This is the kind of mindset, whether it's Ampleforth or another crypto asset, guys, that you have to apply to your trading strategies. If you're not outpacing Bitcoin, if you're not finding those plays that are showing momentum, Again, you can love a project as much as you want. It's not capturing the eyes of the market. Follow what the market's saying. Follow what the buyers are doing. Okay? Because those early movers, the smart money, is going to be where those plays lead in the future. All right. So anyways, everyone, that's it for today's video. Thank you all so much for listening in. If you like this video, please drop a like as always. And until the next one, I'll see you all in the next video. Take care, everyone.